If you have an integrated shield plan rider, or if you tend to purchase one, your out-of-pocket cost could change from April 2026 onwards. Here's everything you need to know about the new requirements for the integrated shield plan rider, or IP rider in short. Hello everyone, I hope you are well. In today's video, we will talk about the new changes that will take place for the integrated shield plan riders, what they mean, and how they could affect your out-of-pocket cost. So let's dive in. Let's start with the most important question by answering whether these upcoming changes will affect you. I mean, this is the most important thing you want to know, right? For this purpose, there are actually three groups of consumers that we will look at. If you have purchased the integrated shield plan rider before 27 of November 2025, you are not affected for now. Your insurer will continue to review their approach and update you if there's going to be any changes. So for now, there's nothing much to worry about. You can still purchase the rider with the current scope of insurance coverage. Typically, these riders will cover both the deductible and co-insurance component of the medical bill, subject to a co-payment of at least 5% or 10%, with a typical cap of $3,000 per year. However, take note that for this group of policyholders, you will eventually transit over to the new IP riders by April 2028. If you want a deeper explanation on how the deductible, co-insurance, and co-payment works with the existing IP riders, I have written a detailed article on it. You may find the link to the article in the video description. If you purchase the integrated shield plan rider on or after 1st of April 2026, the IP rider will incorporate the new design immediately. This new design has three major changes. The new integrated shield plan riders will no longer cover the deductible. The deductible typically ranges between $1,500 to $3,500 depending on your ward class. In other words, you will have to pay this portion of the medical bill from your own pockets. Think of it like the annual first dollar that you take on before your insurance coverage kicks in. Secondly, the co-payment cap will be raised from the current minimum of $3,000 per year to a minimum of $6,000 per year. Of course, for both the deductible and the co-payment, you can continue to use the savings in your CPF Medisave account to pay for this portion of the medical bill. This is subject to the CPF Medisave withdrawal limit. With reduced coverage, we can expect the insurance premium for the new IP riders to be cheaper. According to the data from the Ministry of Health, for those who are on the private hospital IP riders, the savings will be about $600 a year on average. Meanwhile, if you are covered under the public hospital IP rider, you will save about $200 a year on average. So, even though you have lesser insurance coverage now, you also save on the insurance premium. This is not necessarily a bad thing, right? The purpose behind all these adjustments is pretty straightforward. Fundamentally, we must remember that insurance is an instrument to protect you against the huge financial catastrophe, not the small ones. With existing IP riders covering almost everything, patients and even providers are starting to show signs of overconsumption, overusage, or even undergoing unnecessary procedures. This is like a typical buffet syndrome. Since you are covered, must as well just go for everything, right? By reinstating the deductible and to raise the co-payment, Singapore is encouraging more responsible healthcare usage. Meanwhile, the IP riders continue to cover you against large medical bills. With the higher co-payment cap, it also helped to keep pace with the rising healthcare costs. This, in turn, helped the insurance companies to keep the insurance premium rates sustainable in the long run. Now, here is what you can do. If you have an existing integrated shield plan rider already, just keep it and probably review it closer to April next year. That's when the insurance companies will likely launch their new IP rider and we can evaluate whether you should onboard the new ones. However, if you are intending to buy one during this transition period, just take note that you will eventually transit over to the new IP rider by April 2028. If you want a deep dive with examples, I've written a full article breaking down how all these changes affect real hospital bills. The link to the article can be found in the video description. I hope you have found this video to be helpful. If so, consider subscribing and to share it with your friends and family members who may have an integrated shield plan. Bye for now.